reveal itself. As we can see, this move, it is not any kind of fluke. There is a lot of sustainability in this move, and we can also see it reflected in the equity markets. So this is no accident. This is something to take very seriously. Not to say that there isn't a pullback coming in the very near future. You can sort of see that this past week's candle, it's kind of closing relatively bearish, meaning that a pullback would make sense, right? A pullback would make sense because you need to sort of gather up the strength and momentum you're going to need to bust through this 200 week. This is a major area of resistance. So I like to see that Bitcoin didn't just come straight up to it like a short squeeze operation and then just like spring down off of it. That's kind of good. I feel like what we're seeing now is the beginning of a move that's going to be more sustainable, and that's what we want to see. And also we can see that the moving averages are starting to shift in our favor here, where the short-term moving average, the green line here, which is the 50-day moving average, is now crossing above the blue line here, which is the 100-day moving average. And as we'll see when we look at other charts in this video, when we start to see the shorter term moving averages crossing above the longer term moving averages, that is the winds shifting in the favor of the bulls, right? Short-term moving averages crossing above long-term moving averages. And conversely, when the long-term crosses below the short-term, that favors the bears. And that's exactly what you can see up here, right? When this green line crossed below the 100-day and the 200-day, well, that's when things started to kind of fall apart and not look very good. But that's starting to change. I mean, obviously, very, very early signs. We only have one moving average cross that's in the favor of the bulls here. And as you can see, all three major moving averages are below the 200 weeks. So there's still a lot of work to be done here, but this is definitely a very positive development in the cryptocurrency market to see that this move, it's not a short squeeze. It's not a fluke. This is the beginning of Bitcoin coming out of the bear market. And I think it's relatively safe to say, I did say this last week, that this might have been a bottom. It may very well have been a bottom, and that is crazy to think about. But if we look around at other markets, the clues were all there for us. Like the Dow Jones, really powerful off of that 200-week moving average. And now look at the Dow Jones, right? Look at the moving averages here. You have the 50-day crossing. It crossed already above the 200-day, and now you have the 100-day moving average intersecting with the 200-day moving average. Extremely bullish. And of course, not to mention, you're closing many weekly candles above the upper boundary of this trend line. I mean, Dow Jones is looking really positive here, right? We did discuss that this may be some kind of double top, and that's kind of playing out, but that's not really the end of the world here. It just means that maybe the Dow Jones has to pull back, maybe back test this trend line. That would make a whole lot of sense. Just like we said, Bitcoin's probably going to pull back. We've seen a lot of bullish behavior. We've seen a lot of people kind of jump on the bandwagon of the bulls. You're starting to almost feel like there's a little bit of euphoria. And when you feel the euphoria, you got to be cautious that a reversal is coming. And what I'm saying here is the reversal is probably going to be a dip to buy. And we haven't really had many of those in a while, but I think that's potentially what's shaping up. Let's continue to look around at the other markets here. Now, what's powerful about the NASDAQ here is you have now closed a weekly candle above that 200-day moving average, and you're starting to see the 50-day moving average cross above the 100-day. But let's remember the almighty trend line. This is where it gets good, right? So this is a huge development here. Massive development that the NASDAQ has closed a weekly candle above the almighty trend line of 2022. That has not happened in a year. This is huge. This is a big deal, I'd say. And look, it closed on high volume. I mean, this is exactly what you want to see if you've been buying all the way down here. This is extremely positive. Now, look at the IWM. I don't talk about this too much, but it's a really good leading market indicator. So IWM is the ETF that represents the small cap stocks, right? So when the IWM is looking bullish, that means that a lot of money is flowing into the market here. And you can see right here, IWM has now closed 3 weeks above the almighty trend line. And look at this, 50-day moving average crossing above the 200-day moving average. And you can see the 200-week here. They are intersecting with the 200-week. So you're about to enter a very positive phase for the IWM here in terms of what the moving averages are telling us, and also in terms of the fact that it's closing well above this trend line. So that's highly, highly positive. Now, S&P 500, same sort of situation, right? Now, the moving averages are starting to develop to the positive side for sure, kind of similar to Bitcoin where you have the 50 crossing above the 100. That's good. Looks like it could be intersecting with the 200 pretty soon here. But most importantly, you have a weekly candle closing above the trend line. Huge, huge. That has not happened. We've only seen price rejection from there. So this is extremely positive on the bull side of things. So this is all corroborating what Bitcoin is doing. This is all kind of showing us that Bitcoin is not in a fluke. It's not a short squeeze. All of the markets are turning bullish. Things are turning bullish. No one really expected that. And a lot of people didn't want that because a lot of people were shorting the market. I remember the first video I made of 2023, the very first video I made, it was right here. And I literally said, we need to start considering that the bull market could be coming back here. This looks like a reasonable bottom. And sure enough, look what happened. We made it back up to the trend line, and we did not get rejected from the trend line. We closed candles above the trend line. So this may have been a major buying opportunity, and this back here may have been the bear market low on every indice. You can see it on the NASDAQ. You see it on the Dow Jones. October low, bear market low. You see it on the IWM, October low, bear market low. You see it on the SPY, October low, bear market low. That's what it looks like right now. Now, who knows? Things are going to unfold. We can't really speculate on whether or not this was a low. It's too early to say, but it's certainly looking like there's a solid chance that it may have been. Now, we may still see a pullback. And let's talk about this pullback that I think is probably coming, and it may start this week, the week of the Fed meeting, February 1st. The Wednesday of this coming week is a super pivotal day in the markets. The markets will react to whatever the Fed says, whether they say 25 basis points, whether they say 50 basis points. It doesn't really matter. The markets are going to react. And it could set up the perfect catalyst for a major pullback, and that would be an opportunity to buy. So let's talk about what the DXY is doing in relation to all of this, right? So the DXY has just been falling in a straight line down. Like, it literally hasn't had any significant bounces. I mean, I'm looking at everything on the weekly chart today, but that's because the weekly chart holds a lot of weight in terms of trend. And we look at the weekly chart on the DXY, every time it's tried to make it to the upside, it's failed every single time. Look at these supply wicks. This is showing you that every time dollars are getting bought up, they're getting sold at a faster rate than they're getting bought up. So this is a very bearish asset right now. US dollar is incredibly bearish. And we look at the moving averages. Look at the 50 slicing through the 100 and the 200. This is like extremely bearish, right? But with all that said, we can't possibly expect that the US dollar, it's the US dollar. I mean, come on. You can't expect this thing to just fall in a straight line forever. It's not going to. I think a bounce is coming here. I think it's going to be a very feeble bounce. And when that bounce comes in, and let's say it is a feeble bounce, something like this, something like this. That is feeble, right? So when you see, if it comes down to that and we see a bounce like this, just a very feeble bounce, like the minimum technical bounce you could possibly expect, then that becomes another self-fulfilling prophecy that the dollar is in a major downtrend. And this was a blow-off top for the dollar. That's starting to seem likely considering that the markets are turning up the way that they're turning up. If the markets weren't turning up so much, well, the dollar probably would have bounced sooner, and it would have probably had a more aggressive bounce. But I think what we're seeing from the dollar is that it's very weak. It's just a weak instrument in general. So it may have a technical bounce, but that's likely to be a weak technical bounce. So let's talk about February 1st and the interest rate thing. So you got to remember that the United States doesn't want the dollar just to fall all the way into oblivion, right? I mean, they don't want it to be super high either. They need to have a perfect balance. We don't really know what that balance point is for them. But what we know is that when the dollar is really high, that makes it difficult for other countries to do business with the U.S. because they have to convert their currencies to dollars. And if dollars are extremely valuable, well, then it's very expensive to convert a local currency into the U.S. dollar. So the United States doesn't really want the dollar to be at these extremely high levels because that affects GDP. That affects the United States' ability to do business with other countries. But at the same time, they don't want the U.S. dollar to be, worthless, right? They don't want that either because it's the world reserve currency. They want to remain the world reserve currency, and they want other countries to be holding dollars so that the dollar remains the common denominator for currencies, right? The U.S. wants to hold that power, but it is a delicate balance here. So what I'm trying to say is that we don't really know what the ideal level for the U.S. dollar is. We don't know what the United States wants it to be. We don't know. But we can safely say that this was too high. This is too high, right? Is this too low? I don't think it is. Because at the trajectory that we're on right now, I think it's safe to say that this thing is going lower. And the U.S. probably is aware of that. And they're not necessarily worried about that situation. And then you got to remember, the fundamental reason why the dollar shouldn't even be at such high levels relative to, the past decade or whatever, is because they've printed so many dollars, right? So if you flood the market with supply, what does that mean for price? Price goes down. There's not like a specific demand for the dollar at this time. That's what price is telling us. Maybe that will return. But what I'm saying is, I think we can expect a technical bounce and that bounce to be a major failure. So as that technical bounce comes in, this becomes a negative period for the markets. So we sort of enter a period of risk for the markets, at least risk to the downside. Could be a great opportunity to make money on the short side, no doubt. But more importantly, this becomes a time to buy other assets. When the dollar makes this bounce, we could expect a major buying opportunity in all of these assets that have now pumped significantly and are moving above key areas of resistance. So that goes back to say that Bitcoin is in a situation where it's likely to pull back here. But as it pulls back and the dollar moves back up, it will confirm that the dollar is weak. And this pullback in Bitcoin is likely to confirm that Bitcoin is actually very strong. From that pullback, I'd expect that we'd see a break above the 200-week moving average. I really do think that's coming in the near future, like within 2023, absolutely, probably within the first half of 2023. And that's kind of showing you that, man, is 2023 going to turn out to be a bullish year? It's like, whoa, probably, because the DXY is kind of showing that it's not going to have a good year. It's probably just going to continue to the downside. And I think it's safe to say that we have a lot of major bottoms in. The bottom that occurred in October of 2022 for every financial instrument, that was, I think, very likely the bear market bottom. I mean, that's crazy to say that, but yeah, check out gold for a second. So gold shows us something that, it bottomed in October of 2022, right? What's it doing now? Look at these. These are supply wicks on the weekly chart right up at the 702. I actually went short gold right here. I went short. You know why? Because I think the dollar's going to bounce. And I think that gold is going to pull back, probably significantly, because I'm starting to see that risk on appetite returning to the market. That means that things like gold and also the Dow Jones, they may not perform as well as cryptos and techs and things like that. And that does contradict what I was saying in the first video I made in 2023. And that was because I was thinking that 2023 may still be a recessionary year. But the fact that the cryptos have come to life and the NASDAQ has come to life in a big way, that tells me that, maybe we see a lot of risk on buying in 2023. That changes things to me. That's showing us that, that's when true bull markets happen. True bull markets happen when tech is leading. It's not when industrials and gold are leading. Those are recessionary assets. That's sort of fearful buying. This is like, whoa, like we're ready to, this thing's going to rocket. Like people are prepared for the rocket launch scenario. And I think that a lot of people are piled into the long side right here, and they're probably going to get a little bit of a rude awakening in terms of the pullback that I believe is coming very soon. But like I'm saying, if you're prepared for that pullback, that is going to be the biggest buying opportunity of 2023. That's what I'm saying. The pullback that's going to come on the bounce for this DXY, that is going to be the biggest buying opportunity of 2023, no doubt. Now, what happens after that, I can't tell you, but I'm definitely starting to feel very confident that the bull cycle is returning, or at least a bull cycle is returning. So that's all I got for you today. I mean, like, let's keep following up here. Can't wait to see what happens this week. This week is very pivotal. February 1st is going to be a pivotal day for the markets. We could expect to see volatility. What I think is likely going to happen is we're going to have maybe like a blow off top scenario where the markets just rip higher into the Fed meeting. Because maybe what happens on the Fed meeting is Jerome Powell says 25 basis points. Obviously, the market does expect that. That is like what most people expect. The highest probability for the rate hike is 25 basis points. So that is to be expected. But don't underestimate the fact that that is still going to make people like super excited. That is going to bring the bulls out in full force. That's showing you that the Federal Reserve is starting to ease their policy. They're starting to turn the corner on their hawkish behavior. Now, we've discussed many times what that's ultimately going to lead to, not good things. But in the near future, that's going to be a very positive sign for the market, and it's very positive for the next maybe a year in the market. But if they cut rates, that's not what we want to see. We don't want to see them cut rates, but we do want to see them reach a point in the rate hiking cycle where the rates are just at cruising speed, right? They're not rocketing to the upside, but they're starting to slow the pace to the upside. That would be very positive for markets. That would allow a lot of the inflationary pressures to ease. And you better believe that there are major inflationary pressures still. That's something you have to keep in the back of your mind. You have to keep in the back of your mind that like inflation is likely to consume this market at some point. Hopefully that's not within the next 2 years, 2 to 3 years. And if the Fed keeps interest rates, say above 5%, that's good. That will be very positive for markets. Markets will be able to thrive in that environment. Absolutely. But it's when the Fed cuts rates that will have an issue on our hands. So hopefully we don't see that. But I do think if Jerome Powell comes out with 25 basis points, that's going to be euphoric for the market. You're going to have like a blow off top scenario. Then what's going to happen after that blow off top scenario? Major sell pressure, back test the trend line. That's what I'm looking for, right? This is the bounce in the DXY. This is the dip to buy, the ultimate dip of 2023. That's how I see it sort of playing out, right? Huge euphoria for the Fed and their easing of financial policy. And then right after that, the short sellers are going to swarm that because it's going to be a lot of weak hands buying up here. So they'll get shaken out pretty good. But then right here, this is where the smart people will be buying. Absolutely. You better believe this is where I'm going to be loading up. And I'm going to short this. I'm going to go short. I'm going to make money on the way down. But this, to me, is going to be a major, major buying opportunity. That's what I see around the horizon. So however that translates for crypto, you know what I mean? Like it's like buy crypto, right? Whatever that means. I think it's very likely that Bitcoin holds the low. I think it's very likely it finds support around these moving averages. And that's going to be, just a major opportunity. So that's what I got for you guys. Good, dude. I'll see you next week. I can't even wait already.